Hello, everyone. Thank you for joining us today for this free educational presentation. Now, today I want to talk to you about how to never miss a big move with this strategy. We know what a lot of our students say the problem they had before becoming students with ours is that they would often look for a stock, future, currency pair, even crypto, and they would be interested in buying something, but then they'd walk away from it, and the next thing they know, they missed the big move entirely. For example, if we take a look at this older chart here in Lulu, L-U-L-U. This was just a month or so ago. Let's say you were interested in this, but it seems to be going nowhere, kind of drifting upper a little bit, but more sideways in this last portion here. So you walk away or you don't follow it as much as you were initially. And then this happens, right? Where you miss the trade entirely. Well, what I'm going to be doing today is actually teach you the entry rules to a very, very consistent method which actually would have had you entering right here. And therefore, in the next 4 days, you could have potentially captured upwards of 82 points. So you're going to learn the entry rules and how to execute this today. And we're going to be speaking about how to never miss a big move with this strategy. And you can only get this strategy if you like to see the signals being auto-generated on the screen. You can only get it on our platform, the PTS Primo Charting platform that actually teaches you how to trade. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 48 years. As I say oftentimes during my presentation, I started my career on the floor of the Pacific Stock Exchange. I was on the floor 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Once again, a specialist is just someone who's not more special than other traders. It's someone who's specialized in making a market, roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock like IBM, Waste Management, US Air, which were all stocks I made markets in, you had to trade with the trader who specialized in making a market in those particular stocks. So I did that during the crash of 87 and the bull market that followed. I've traded straight up markets, straight down markets. I've managed money. I've created my own strategies as well. And in my 48 years of trading experience now, I know what works in terms of consistency and I know what doesn't work. So about 15 years ago, I teamed up with ProTrader Strategies with one goal, and that was simply to educate traders so that they could make their own trading decisions. If there's one thing I've learned in 48 years of trading, the only traders who are consistent, the only ones who consistently do well in the markets are the ones that make their own trading decisions. So this is our goal here at Specialist Trading, to provide you with the tools, the tips, and the information to help you make your own destiny in terms of the market, okay? And you'll see that in today's educational class. Now, once again, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Another way to get education from us and from our teaching is to follow us on Twitter or X, however you like to name it. I post upwards of 5 to 7 different snapshots a day of signals that have been generated by our methods, also little bits of financial wisdom. So there's lots of great way to get information and education by following us on X. There's our handle right there. You may want to copy that down. Also, if you're interested in seeing more content on YouTube, please hit the subscribe button. We are live streaming this right now on YouTube. If you hit the subscribe button, you'll see a lot more of this as well. A lot of great free education coming from Specialist Trading. Okay, so let's begin today's educational presentation, and we're going to be talking about strategy 3A. Okay. Some of the highlights of this particular method: it's a continuation strategy. So what does that mean? Well, it simply means that we're looking for a trend to already be established. Now, where most traders are afraid to get in the trend because they feel like, well, it's already gone up too much, too high, or it's already gone down too low. I can't sell it here. Well, this has an uncanny ability to tell you if there's more gas left in the tank for it to continue its trend. That's what a continuation strategy is. Now, it does this by applying a unique Bollinger Band setting. All right, I know most of you have used or are aware of Bollinger Bands. We're going to use a unique Bollinger Band setting. This is usually reserved for our members who have purchased Strategy 3A. But guess what? You're going to get the unique setting today altogether. Now, it's designed to trade these quick, powerful trends, the continuation of the trend. The good news is You don't have to have a different strategy if you want to trade a different market or a different time frame. You can apply the same rules to any market, any time frame, and any direction. So if you like to trade stocks or if you like to trade intraday futures, makes no difference. The same rules apply. But please learn this strategy, the entry rules I'll be giving you today first. Paper trade first. Don't just simply jump in and say, oh, this is amazing. I'm going to start trading this afternoon, because I can almost guarantee you, you're going to lose money. I've given this presentation before in the past, and then I get a lot of emails from prospective students or students saying, hey, this doesn't work. How come? And then I asked to see their work, and they implemented the rules that I explained to them incorrectly. So please watch the video. We're going to send out a video to everyone. You can watch it over and over again and learn how to paper trade this. When you fully understand the process, then apply real funds and apply small in the beginning. Our edge here with this strategy and with all our methods of specialist trading is consistency. That's the specialist edge. But consistency does not mean that every trade is going to be a winner. Consistency is an awareness that you may have losses from time to time. That's okay. But a consistent method is one that's able to recoup those losses, often on the very next setup. So what you don't want is an inconsistent method that maybe hits a home run every once in a while and gives you this false sense of security that, wow, I'm doing really well. But then in the next month or so, you give it all back. That's not a consistent method. A consistent method is a 2 steps forward, 1 step back approach. All right, so let's talk about Bollinger Bands. All right, a brief refresher course. These are the standard Bollinger Bands setup, okay? Now, settings. Now, it's constructed of 3 bands. The middle band is simply a moving average. In fact, it's a 20-period simple moving average. But then you have a band above it, and you have a band below it. This is where you have 3 bands altogether. Now, the upper band deviation and the lower band deviation simply means, without getting too technical and going into the inner workings of this particular indicator, it just simply means the distance the upper and the lower band are from that middle band, which is a 20-period moving average. Now, the standard setting for this upper and lower band deviation is +2 for the upper band and -2 for the lower band. So if we look at a generic chart here, this is the way a standard setting Bollinger Band would appear on your chart. It's 3 bands. The middle one is just a 20-period simple moving average. That's all this is. And the upper band is set to a 2 deviation or a number 2 deviation. And the lower band here is set to a negative number 2 deviation. So that's all it is. That's all the standard settings are for the Bollinger Bands. We're going to mix things up a bit. We're going to change those settings. And here are the proprietary settings. Once again, this is what we use to generate these setups. Now, remember, if you don't write them down or understand them right away, we're going to send you each a link to this recording so you can study at your own leisure. So don't worry if you don't get it right away. But here are the proprietary settings that we apply. We're going to keep the middle band, which is the moving average, the same. It's going to be set at a 20-period simple moving average. But what we're going to be changing are the upper and lower band deviations. We're going down to fractions. From a solid number where it normally is set at 2, we're going down for the upper band to plus 0.382. And the lower band deviation is negative 0.382. Okay? That's all we're doing. That's all we're changing. We're keeping the middle the same. Now, regardless of what platform you have, you should be able to automatically change this on your own. Just open up the edit box and change the deviation from 2 to 0.382 and negative 0.382. If you're not able to do that, contact whatever platform you're applying and contact their tech support, and they should be able to set it up for you. Okay? So once again, let's look at the standard settings of Bollinger Band. This is the way it normally looks. And once we apply our proprietary settings, it appears like this. You see how much smoother it is. Okay, this is going to help us with our entries. It's going to tell us if we have a valid setup or not. Now, I know a lot of you may say, well, Steve, this looks like a moving average envelope, or it looks like the Keltner channels, okay? Trust me, it's not. I've experimented with those as well for the last 48 years, and for some reason, the best settings I get and the best setups are with this proprietary settings for Bollinger Band. So feel free to experiment with other indicators if you'd like. But I can tell you right now, I've already done that hard work for you for the last 4 decades, and the best signals come from using the Bollinger Bands with this proprietary setup. All right, so let's talk to you about the entry rules. And remember, once again, this is being recorded, so you'll be able to get a link to this recording and go over them at your leisure time, all right? All right, step number one, obviously we want to plot the proprietary Bollinger Band setting on your chart. Now this stands to reason, but the reason why we included this as step one is because everyone trades different markets, different time frames. So we're basically trying to say that it makes no difference what market, what time frame you're looking at. You should always plot the proprietary Bollinger Band if you're going to use this strategy. Okay, so we're looking here at an older chart of Tesla, and we can see that the stock has been going straight up, right? All right. Now, a lot of people may say, well, gosh, it's gone up too high, but you may even think it's overbought. But what we want to do on our platform, it's simple. Click on Strategy 3A in our green strategy tab. Once you click that on, you'll see a drop-down menu. Just click on Indicator. And the proprietary Bollinger Band indicator will automatically be displayed. So on our platform, we made it easy. There's nothing for you to go into your edit box, whatever platform you're using, and change the settings every time you want to use this or try and figure out how to do it or call your tech support. It's automatically right there for you. Just one click away and you'll see this proprietary setting. Okay, so that's step one. Step two, we want to identify 5 consecutive price bars that either close on or above the highest Bollinger Band. All right, so let's see what that looks like. Here we are, and price is below the Bollinger Band. Now we're kind of intersecting it, but we want to have 5 that close above it, consecutively above it. And here we actually have 5 consecutive closes above. Now, where students have a problem is they say, well, Steve, why is this number 1? Because it's touching the Bollinger Bands. Remember, we're not interested if it touches or not. It just has to close above there. So this is one of the problems that most students make. They say, well, it wasn't a valid signal, right? Because it didn't, traded there or it actually touched there. No, it just has to close above. It's okay if it touches. So this fulfills step number 2. Now we go to step number 3. We're going to enter to buy, not at the market, not when we see these 5 consecutive closes, but we're only going to enter to buy when price trades 1 tick above bar number 5. All right, now you notice I underlined trades because a lot of students, once again, they say, well, Steve, it didn't close above bar number 5, so I didn't buy. Remember, it doesn't have to close above bar number 5. It just has to trade. 1 tick. 1 tick is 1 unit of measurement. So in other words, if you were following a stock and the high of bar number 5 was 50, well, 1 tick above would be 50.01. Okay. If you're following E-mini futures, a unit of measurement is 25 cents. So you have to know what market you're looking at and what a unit of measurement is. For a currency pair, it would be 1 pip above. All right, so here's bar number 5. Are we going to buy at the close of bar number 5? No, it has to trade right here. This is 1 tick above bar number 5. Doesn't have to close above, just has to trade. So let's follow it. Let's see what happened. Well, the next bar, it didn't trade there. So we're not in the trade yet. We're still waiting and watching. What happened on the next day? Well, the next day it did trade there. So we entered. Now you could easily, if you're in front of your computer, you can sit there and watch us all day and draw an imaginary line. And the minute it trades, just buy at the market. Or you could enter a stop buy if you'd like. It's up to you. Doesn't matter what market or what time frame. But look what happened after that. Stock went up 115 points in the next week or so. Now remember where you could have thought it was overbought? That's the beauty of this strategy because it has an uncanny ability to tell you if there's no more room left in the tank for it to go higher or lower. Okay, so you get the gist of the entry rules. Now, obviously, we didn't tell you where to place your stop or where to exit. We have numerous places where to do that in the course, but we can't give away all the rules for free. It wouldn't be fair to the people around the world in over 115 countries that have purchased Strategy 3A. But guess what? We've given you the entry rules. So you can experiment with this on your own. Let's look at some more recent Strategy 3A examples, just so you can get the idea of how to actually construct this method. Okay, let's look at TMUS. Once again, we're kind of slowly drifting higher, but we're not really sure what this thing is going to do. We don't really have any idea. So we click on Strategy 3A. In the drop-down menu, click on Indicator, because that's the proprietary indicator settings. And what do we find here? We have 5 consecutive closes above the highest Bollinger Band. So is this telling us to buy at the market? Absolutely not. It's just setting up for a buy. We still need to trade 1 tick above bar number 5 right here. Okay, so let's follow it and see what happened. Well, the very next bar, the very next day, it actually traded there and closed either right on it or just a little bit above. So now we've entered and we're long TMUS, okay, T-Mobile. And look what happened coming into December at 42 months, 42 points, I should say. You didn't miss that at all, right? Now, obviously, if you stayed in the entire time, you could have potentially captured 42 points. A lot of our students like to take this nice little run right here and get out and look for another setup. It's up to you. Remember, our job as an educator is not to trade for you. Our job is to provide you with these high probability setups so that you can decide for yourself what you want to do. And remember, in the course, we give you upwards of 6 or 7 different ways to exit, 6 or 7 different ways to place your stop or to manage the trade, just so you can decide what feels normal and what feels comfortable for you. That's the only way in my over 4 decades, nearly 5 decades of trading, that you will become a consistent trader, not by blindly following what someone signals on TV or what someone gives you in an online chat. It's by what you decide. All right, let's look at CTAS, all right, Cintas. All right, this stock was kind of going sideways and then fell out of bed. And you're saying to yourself, wow, okay, this looks pretty bad. But then it starts to firm up. And then maybe you go to that chat room and the guy in the chat room, or maybe that $10,000 program you bought, says there's major institutional support here. The big banks, the big money is buying. So how can you be a seller, right? You've got to go in and jump in and buy in this, right? Well, why don't we find out what the market's telling us? Click on Strategy 3A on our platform. This is how simple it is. It takes you less than a couple of seconds to do this. Click on Indicator. And sure, we may have hit some institutional support. Maybe we're bottoming out. We don't know yet. But we have 1, 2, 3, 4, 5 closes below the lowest Bollinger Band. That's telling us that we are setting up for a sell signal, that the market may want to go lower, that this is not some institutional support. This is actually a setup that it wants to go lower, but it has to trade 1 tick below bar number 5. So let's wait. Let's see what happened. Well, the next bar, nope, it didn't trade there. Maybe it is going to go up, but at least we didn't lose any money, right? But look what happened on the next bar. It actually traded there and closed below. But we don't care where it closes. As long as it traded there, we could have bought some puts or maybe sold short or some type of spread strategy with a downward bias, because look what happened in the next 2 days. The stock fell 27 points. What happened to the institutional support? What happened to all the buyers, right? This is the beauty of this method. It doesn't care or listen to that, what my mentors called outside noise. It only looks at market behavior. All right, here's that chart in Lulu that we opened up the presentation with. How come we had a signal to buy? Well, because we had a total of 1, 2, 3, 4, 5 consecutive closes, either on the highest Bollinger Band or above. This is where students make the mistake again. They say, but Steve, we didn't close above. Even if it closes on, that's perfectly okay. So that was a buy setup. We didn't buy at the market. What we want to do is buy once it trades right here. So let's see what happened on the very next bar. It did trade there. Closed a little bit above, but that's okay. We enter 82 points we could have potentially captured in the next 4 days. You would not have missed the big move. Let's look at ROP. 5 consecutive closes below the lowest Bollinger Band. Okay. Here's bar number 5. Here's where we'll enter. The very next bar, we went short. Now remember, in the course, we will tell you exactly, once you get in, even prior to getting in, where you'd place your stop. And we'd also tell you 6 or 7 ways to do that. We'd also inform you 6 or 7 different ways of where you can exit if you'd like. But you've got to make that choice. Some traders would say, well, Steve, I want as much bang for my buck. I want to stay in as long as possible. Okay, we'll show you how to do that. Other traders would say, Steve, I just want to get in and out quickly. I don't feel comfortable being short. Okay, we show you how to do that. Either way, you would have been short right now and potentially been able to capture 50 points coming into last week. This just happened in ROP, Roper Technologies. Here's an example in the 4-hour Canadian dollar for all you currency pair traders. Okay, how could we have captured this? Looking back in hindsight on a 4-hour chart, which a lot of currency pair traders like to trade off of, how could we have taken advantage of this big run? You know, a lot of traders like to say, gosh, how come I missed that? I would have loved to have been long the Canadian dollar. Well, first thing you do is apply, and you would have seen using the proprietary Bollinger Bands, look at the number of bars we had above. 5 consecutive bars. Now, we would not have bought this in the next 2 days because it never traded there. But as long as it's still valid and you're still interested, 2 days later, you could have entered and potentially captured 200 pips or $2,000 per unit. Potentially, you could have captured in about 3 days. Okay. Or we can look at a daily chart of the Australian dollar. Once again, looking back in hindsight, someone could say, gosh, why didn't I sell? Why didn't I go short the Australian dollar? Or at least, why didn't I get out of my long position? Simple. Apply the already predefined Bollinger Band setting on our platform. You just have to simply click it on, and you would have seen that there were 5 consecutive closes right here, starting right here. Remember, we had a close above, so this negated the previous count. But then you start over again. Could have gotten short right there and potentially captured 230 pips coming into last week. This was the Australian dollar. How about a weekly chart? All right, we know a lot of traders don't just intraday trade or trade other markets. They're more swing traders. Okay, here's a weekly chart of REGN, Regeneron. All right, the same process applies. Nothing changes because we're looking at a 4-hour chart of the Canadian dollar or a daily chart of stocks. We can look at a weekly chart. 5 consecutive closes below, okay, right here. Bar number 5 will only sell if it trades 1 tick below. Now, this is a great way for investors to exit long positions. If you don't want to go short on a weekly time frame, sure, you can use this to exit your long position and protect your profits. Because if you would have entered right here and just sold, you could have protected yourself with 255 points you would not have lost if you had still held on and been long. This is what happened to so many traders. They'll hold on to a losing position and say, why didn't I get out? I missed getting out of that big downward move. Well, strategy 3A could help you exit, at least, if you don't want to go short. Now, if you're a more aggressive trader, sure, you could have gone short and potentially captured over 250 points. And we could even look at its higher time frame. Let's look at a monthly time frame of Costco going back almost 2 years, okay, going back to 2023. And we'll go through the exact same process. Now, here we're in an uptrend, right? But let's say your broker or some guy says, well, you've got to sell this. It's kind of got too high. And if you're thinking about going long, I would wait for it to come down a little bit. Because look, we've been going up for the past 6, 7 months. It's time to just for this to back and fill a little bit. And I don't like the market. I don't like what's going on economically, inflation. You know, you can come up with all these millions of reasons. And this is why traders fail, because they look at this outside noise. Just listen to what the market is telling you, the chart in front of you, because that's the very source of what you're trading, right? So if that's what you're trading, why are you listening to something or someone else? Listen to what the market's telling you. And if we apply the Bollinger Bands, we're really not overbought at all. In fact, click on 3A, click on indicator, and Costco on a monthly time frame is saying, well, listen, we may be getting a little toppy, but we are also at the same time setting up for an up move. So which one is it? Well, you can count 5, 1, 2, 3, 4, 5 bars and wait to see if it trades 1 tick above bar number 5. Now remember, each one of these bars is a month, but all you need to do is just trade there. It doesn't have to close at the end of the month. So look what happened. This was in October of 2023, almost a year and a half ago. You would have entered on the very next month, all right? So you would have entered right here, and we all know what Costco has done on a monthly time frame. Potentially coming into the end of this year, 400 points you could have potentially captured. Now, this is a monthly time frame. Now, I'm really tired of students saying, gosh, Steve, I always miss these big moves. You know, traders love to play this victim game. But once you know how to listen to the market and forget about, as my mentors called, the outside noise of chat rooms, of guys on TV, of earnings, of economic reports, and learn how to just listen to market behavior, what the market is telling you, that's when you start to get on that road to becoming a consistent trader. And this is our goal as an educator, to teach you how to identify this. And we've made it simple with our methods, and we've made it simple with everything being 1 click away on our platform. Okay, so let's recap what we shared with you today. This was strategy 3A, a continuation strategy, looking for a continuation of trend, and we're jumping on board. Kind of like a train that's left the train station and it's taking off without you, and we teach you how to jump on board the train before it takes off, all right? Now, it does this by applying a unique Bollinger Band setting, usually reserved for our students who purchase this, But guess what? You just got it for free today. It's designed to trade these quick, powerful trends. You can apply to any market, any time frame, and any direction. But please, I know a lot of you are saying, wow, I'm going to start trading this in the next 15 minutes. Please don't do that. Paper trade first. You're always going to be getting set up. So don't worry, you're not going to miss anything. Okay? Don't have that fear of missing out attitude. There's always setups so you can always apply. It's much better, much more prudent to paper trade first. Learn the strategy. Our edge at specialist trading is consistency. Consistency is a 2-step forward, 1 step back, meaning that you'll have some nice winners followed by maybe a loss or two every once in a while. But a consistent method is one that's able to recoup those losses, often on the very next setup. So ask yourself, and ask yourself honestly, do you think this strategy 3A, which you now have the entry rules to, do you think it can help your trading going into 2025? I think most of you would answer resoundingly yes. Well, guess what? What if I could give you many more, dozens more of tips and techniques that I've accumulated in my nearly 5 decades of trading? Well, we have a very special offer for all of you attending today. We call this our Trading Floor Edges course. What it is a 10-video course which includes over 48 years of trading experience, high probability edges that I've accumulated in my 48 years, like 2 techniques that will elevate your trading automatically. Also, how to be in sync with the overall trend and how to identify the overall trend instantly. 3 steps to a successful trade. How to fine-tune your entries. Most traders never realize that their entries are usually faulty. We teach you how to fine-tune them. Also, next-level exiting techniques. How to exit a trade the way you'd like to exit, okay? Remember, everything I'll be teaching in this 10-video course can be applied to any market, any time frame, and any direction. So I know a lot of you may be saying, well, Steve, I just saw this presentation. I really don't trade stocks or cryptos or currency pairs. I'm a futures trader. Well, so am I. That's my market of choice. And you can apply this to any market you'd like, okay? Now, I think one of the best things in this 10-video course is a superior candlestick trading edge that you'll learn, that I'll teach you in this course. Let me share with you exactly what it looks like, okay? Let's take a look at this chart here. Here's an older chart of PLTR. This was just a couple of months ago. Now, obviously, it's going in an uptrend, right? Standard conventional wisdom tells us if we're going to be trading candlesticks, we look for reversal patterns. Most candlestick patterns are reversal patterns. So obviously, if we've been in an uptrend the way we are right here, we're looking for a reversal pattern where this will tell us the market's going to be headed lower. And then what do we have here? Well, right on these last 2 bars, we have what's one of the most popular reversal patterns. It's called a bearish engulfing pattern. Okay, this is a 2-bar pattern, very popular, that would signal that most likely we're going to be headed lower. So let's say you're a beginning candlestick student. You say to yourself, wow, this is great. I'm going to short this, buy some puts. I'm going to make a lot of money because candlesticks are never wrong, right? And then look what happens. It goes straight up. The day after you sell it, it goes straight up, right? Well, here's what we're going to do. I'm going to share with you a non-traditional way of trading candlesticks that would not have had you selling right here, but actually on the bar before would have had you buying, so that you could have potentially captured that nice run-up with a high probability non-traditional candlestick method. So you're going to learn the superior candlestick trading edge in this 10-video course as well. So this is a 10-video course which includes over 48 years of trading experience and a superior candlestick trading edge, but mostly we know that we have so much information here that on the website, it is advertised for close to $1,000. There's so much information here. Here's what we're going to do. We're going to discount this tremendously, but only for a limited time, all the way down to $19. Just $19, you're going to get close to 5 decades of tips and techniques that's taken me that long to accumulate. Think of it. For $19, you can't even go out to lunch these days, not even by yourself, for less than $25 or so. But for $19, you get close to 5 decades of information that's yours to keep forever. But remember, this is for a limited time only, just for the taking time out of your Wednesday to see this presentation. Now, we're not going to stop there. We're going to also include an extra bonus. Along with your purchase of the Trading Edges course for $19, we will also include a 50% discount on any other product we sell. Any other strategy, any other technique or indicator, if you're interested in, you can get a 50% half off discount price just for spending the $19. This is another great extra bonus. It's just our way of trying to get to know you and show you that our real motivation is not like so many other presentations you may have gone to where they don't even teach you anything. They string you along and then say, well, in order to find out how to do it, you've got to spend $5,000. Guess what? We've already taught you the entry rules for absolutely nothing, for free, on how to trade strategy 3A. We're only charging $19 for close to 5 decades of information, and we're throwing in an extra bonus, excuse me, of getting half off on anything else that we offer at Specialist Trading and Pro Trader Strategies, my sister site. This is a great way to take your trading to the next level. You owe it to yourself to make your trading go to the next level and take it to the next level. So take advantage of this great offer. It's the beginning of the year. Start out in the right direction, okay? Here's how to take advantage of this. Contact my sister site, which is Pro Trader Strategies. They're in charge of all the discounts. They're in charge of all the tech support. They can answer any question you may have about our platform or about pricing or about this offer that we have for today. Now, that link you see at the very bottom is the link that will take you to the info page or the sign-up page if you'd like to purchase this online, but it's not a live link. If you go to the chat box, you see the little chat icon right there in the Zoom box there, simply click that on. You'll see a live link posted there, so you can just click that on. Now, I would highly suggest clicking that link on and reading more about what's offered, but at the same time, for live questions, contact Pro Trader Strategies. Give them a call at 310-598-6677. One of their trading consultants will be happy to answer any questions you have over the phone. Don't feel as if you're intimidated to purchase something, even if it's only $19, that's okay. They're there to work with you, and they're there to really give you any information that you may want, okay? Now, in terms of information, now is the time to ask me any questions. We are at the end of the presentation. I'll leave this information up here. If you can copy it down, copy the number down, or go to the link and click it on. If you have any questions, click on either the chat box or the question and answer box, and I'll answer them to the best of my ability. I see we have something here that says, when does the trade become invalid if waiting for the price to trade past the 5th bar? Very good question. I can see this person has been trading for a while. I usually don't go into this. We go into this into the course, but the standard rule is, let's say you have a buy setup, okay? And you have 5 bars above the highest Bollinger Band. You're waiting for it to trade 1 tick above that highest bar, okay? Now, let's say it doesn't do this for a couple of days. As long as the price bar does not close within those Bollinger Bands, it's still valid. So in other words, let's say 2 or 3 days, it doesn't trade 1 tick above, but it still has not traded within the Bollinger Band, in between the highest and the lowest Bollinger Band. It's still okay. Now, a lot of our students say, well, Steve, you know what? I don't like to tie up my money or be watching for a long time, so I only give myself 1 or 2 days. If it doesn't happen by 1 or 2 days, I just forget about it. That's fine. Remember, this is not a system. You're free to trade however you like. That's our philosophy. So we don't feel that every trader should trade alike. You have to trade what makes you comfortable. That's how you become a consistent trader. So if you feel you only want to watch for 1 or 2 days, fine. If you feel you'll wait until it trades below the highest bar or closes below the highest bar, that's fine. It's entirely up to you, okay? Another question, is this being recorded and will it be mailed out? Yes, I announced that a couple of times, but you probably missed it. This is being recorded. Each and every one of you will be sent a link to this recording where you can watch it at your own leisure, okay? All right. Good question. Let's see. Is the 50-period simple moving average used in the... I don't want to give away all these strategy rules. It wouldn't be fair for people that have purchased a strategy. So, I really just want to keep it basically there. I've already given you a couple of the rules by sharing. This is the same person that asked, how do we know when the trade's invalid? Experiment with it. See how you want. Now, if you feel you want to use the 50-period movement, go ahead. If you feel you don't want to, that's fine. Let's see. Someone asked a question, but they didn't write anything down. That's okay. Oh, it was just a thank you. You're more than welcome. You're more than welcome. Steve, I have not been trading for that long. I have difficulty with technical analysis. I'm more of a fundamentalist trader, so this is all new to me. What if I have questions? Don't worry. Everyone has questions. In fact, we have some hedge fund traders who have seen this strategy before and they have questions for me. It's okay. Don't worry if you've been trading for 2 weeks or 20 years. Everyone should have questions. I want you to have questions once you become a member of this course. But just once you become a member of this course and purchase the Floor Trader Edges, you will also, each and every one of you will get my personal email address where you can ask me questions anytime you like. And the emails go directly to me. They don't go to an intern. They don't go to a salesperson. So don't worry about someone else seeing your question. It will go only to me, and I will answer it as soon as possible. Okay. So that's the best way to learn it. And once again, this other person was asking about the 50-period moving average. Once you become a student, you'll see, and you can ask me more questions about that. I just don't want to give away everything, because I know if we have students in here that have purchased Strategy 3A, they're probably saying, "Gosh, Steve, you're giving away everything here. That's not fair," So it's not really fair. I've given you the basic entry rule, so that should be more than enough. Okay. Good questions, though. Any other questions? Remember, this deal, someone's asking me, how long is this for? Probably a better question to ask Pro Trader Strategies. I know it's limited, but most of the time it's only up until the weekend, possibly Monday, and then that's it. Then it goes back to the close to $1,000. So if you're really interested in learning these things that have taken me 5 decades, I mean, $19. I mean, you can't even, most of you maybe have spent more than that in commissions this week, just trading, okay? So for $19, this is yours to keep. It's not something that self-disintegrates in a couple of weeks and then you have to purchase something for $10,000. No, it's yours for life. You can always go back and look at this as a reference, okay? Someone's asking, is Strategy 3A the best one for these volatile markets? There's no such thing as best, in our opinion, because, as I said, everyone trades differently. Someone may say, oh, no, the best strategy is Strategy 4. Someone would say, no, the best strategy is strategy 3A. Whereas someone could say, no, the best strategy is strategy 2. Are they all wrong? No, it's just that everyone has a different way of trading. Someone may have a huge $250,000 trading account. Other may have a $5,000 trading account. So this tends to affect how they make their decisions, which is okay. So all we can say is that Strategy 3 is a great strategy designed for these volatile markets. So it's a great strategy to have in your back pocket. Once you see these volatile markets kick in, you can just start trading with it. All right. And so let's say the market, if you're an intraday trader where you see these really quick swings in a 5-minute chart to the upside or the downside, this is a great method to have, a great method, okay? Okay, if there are no further questions, great questions, by the way, we're at the end of the presentation. Remember, if you have more questions, do not hesitate to contact Pro Trader Strategies. They're in charge of all the tech support, as well as taking your order or the discounts. They can give you more information about 50% discount on any of the product we have. But they're there to work for you, so don't worry. They're very flexible, and in no way they're going to try to oversell you or try to intimidate you. We're very flexible. Remember, we're an educational company. That's our sole purpose, to educate you. So we're just trying to show you, by showing you this really inexpensive price, how we want to make sure that each and every one of you can prosper and become a consistent trader. You don't have to spend a lot of money, okay? Okay. As we conclude now and take one last look at our disclaimer as we go right here, here we are. I want to thank you just for taking time out of your Wednesday. I know you have a lot of important things to do, but I want to thank you so much for taking time out. And I hope you learned something today. Remember, please paper trade it first. You're going to get a video. And so I would recommend just watching that again, just so that you fully understand the rules. So please paper trade Strategy 3A before you apply real funds, okay? Thank you so much for watching. And once again, I look forward to all of you becoming students of mine at Specialist Trading. Have a great day and hope to see you in class. Bye-bye.